MarketStream.live. I'm Joe Cusick from the Cusick Group, securities provided by MoneyBlock. With your overnight action report, well, taking a look at equities across the board, both in Asia and Europe, we have some mixed to down action. As a matter of fact, just saw a headline that came out that they revised down the PMIs, the Purchasers Managing Index, for September in Europe. That actually has yields on the run. So we're going to take a look at that when we get to the section when we talk about Europe. But taking a look at equities across the Pacific region right now, they ended the week on a lower note. There still seems to be some cautious trade in front of the elections that are on November 8th. The Reserve Bank of Australia, though, did release a quarterly policy statement. Now, Australia is a very commodity-centric economy. It said that maintained all growth and inflation projections for the next 3 years. Now, what was interesting about this statement from the Australian Reserve Bank was that they remain very watchful for signs of a slowdown in China. Very interesting. This is a commodity-based economy, so if they're fearing that there's some sort of slowdown in China, that's going to potentially impact them pretty dramatically. That's something to keep an eye on. Taking a look at Japan, they lost roughly around 1.3%. Their weekly decline was right at, as I look at the Nikkei, down about 3.1%. Now, all 10 sectors were in the red, with healthcare leading the way to the downside last night, down about 2.5%. You had financials down 2.1%. Technology is down 1.4%. They're all showing relative weakness, and these are the offensive sectors you do not want to see weakness in. Casio Computer, Sapporo Holdings, Mazda Motors, Mitsubishi, Toyota, Trend Micro, and Honda all lost between 3.5% and 7.7%. So there's some pretty decent sized losses in the end of the week in the Nikkei, in the Nikkei. Taking a look at EWJ, closed last night at 1238. They're pricing in the potential next week to move right around 33 cents into plus or minus for the stock. Now, implied volatility there is at 22% for the week of November 11th. That's the election week. That's about 4% higher than the back months as far as implied volatility. So there is a heightened expectation of potential movement. There could be some money moving to the sidelines until we see what the results are of the November 8th election. You're going to hear that theme throughout the day for the remainder of this weekend and into early next week until we get through that event. Hong Kong's Hang Seng shed about 0.2%. Now, taking a look, the whole week it ended about down 1.4%. Financials continue to be the laggard in the Hang Seng, with BSC China, Hong Kong, and then Hang Lung Properties, as well as Bank of China and HSBC, all falling between 0.3% and 0.7%. There continues to be some pressure in the financials and specifically in the banking sector in Hong Kong. Also, watch some pricing data that's going to come out next week. We want to see if home prices are starting to increase. There's been some discussion that the Chinese government is trying to force an increase in pricing in Hong Kong. EWH is the ETF that tracks the shares in the Hang Seng, and right now it's trading at 21.15. They're pricing in the potential to move about 51 cents in the stock next week for the options. Implied vol is at 22%. Again, next week's implied volatility, or the volatility right now in the front month options and the weeklies, is up about 4% going into the election. Taking a look at China's Shanghai Index in composite, it slipped about 0.1%. It did narrow its weekly gain, though. About 0.7% was the weekly gain. You continue to see Danhao Chemical Technology. You see Beijing Real Estate, as well as Rutan Electric, all losing between 3.7% and 4.2%. Again, there is some concern out of the Reserve Bank in Australia. They think there is a potential for some future slowdown in China. We're going to keep an eye on these names. Taking a look at Asher, which is the ETF that tracks the stocks that trade in China. The top 300 stock went out. The ETF went out at 24.70 last night, pricing in the potential to move about 47 cents into next week. Finally, as far as Asia is concerned, we're going to take a look at India. The Sensex did surrender about 0.6%. It extended its weekly loss down about 2.9%. You're seeing a consistent theme right here. Seems to be a lot of unwinding in not only into the election, but just in general, there's some uncertainty about whether growth is actually slated at the levels that we've been anticipating and hearing so far. Drug makers continue to struggle. There is some concerns. There's been a lot of discussion over the last 24 hours about the DOJ coming out there and the lawmakers looking at potential collusion with some of the drug making and in the drug making industry. We're going to watch those headlines today, but that is going to impact not only the big names, but also some of the generics. Sun Pharma, Dr. Reddy's, which we talked about last night, as well as Lupin, all lost between 3.6% and 7.4%. Financials were also mixed, with Axis Bank losing about 0.5% and HDFC Bank losing about 1% in India. And taking a look at the EPI, which is the ETF that tracks the Indian stocks here in the United States, it's trading around $20.40. It's looking like it could move about 64 cents next week, either up or down. Implied volatility is at 25%, and then the November implied volatility in the weeklies is 5% higher than the back month. So we have some volatility that's being built into next week. Makes some sense. We have all of these headlines out on the election, as well as you're seeing headlines on drug makers, on revisions to purchasing managing indexes. So there's a lot going on. The major European indices continue to trade lower in the session right now as we're waiting for the latest jobs data out of here in the U.S. Now, as I said, there was a revision down of the European zone PMIs. Across the board, they were lower. If you see purchasing managing in numbers come down, it's basically telling you that the expectation of future growth is starting to come into question. I think right now you're going to see that Germany is a little bit lower. It's down about 0.9%. And this is a little bit troublesome in the German DAX and in the German markets. We continue to see that the banks are trading lower. Specifically, Deutsche Bank is trading down about 1.8%. And you're also seeing exporters. I talked about this 2 weeks ago, and it was a consistent theme. Watch the exporters in Europe and in Asia. BMW, Daimler, Chrysler, Volkswagen all showed losses between 0.7% and 1.4%. EWG is the ETF that tracks the German stocks. We can trade it here in the U.S. during our market hours. Went out at $25.12 last night, pricing in the potential to move about up or down 71 cents in the next week, and volatility is heightened in the weekly options. Taking a look at the UK and the FTSE, it's given up about 1.3%. Again, drug makers are coming under pressure there in the UK markets. Hikma, Pharmaceuticals, Shire, all down basically about 5.3% and 3.1% respectively. We're also seeing that home builders like Persimmon, Taylor Wimpey, and Barrett Developments are also lagging, showing losses between 3.6% and 4.3%. EWU is the ETF that tracks the UK stocks that trades here in the United States. Trading went out last night at $14.80. It's pricing in the potential to move about 49 cents in the next week, either up or down. Implied volatility is at 28%, which is about 8% higher than the back months right now. So those front month options, they're pricing in some potential decent moves. You're seeing that implied volatility is heightened roughly around 20-25% versus the back months. That's just telling you folks that there's a heightened expectation of potential movement. Not huge violent movement at this juncture, but movement. Taking a look at Italy and Spain, revised down both their PMIs. Markets are lagging as well with their European peers. EWI is the ETF you want to watch for Italy, and EWP is what you want to watch for Spain. All right, folks, that is it today for the overnight action. A lot going on, headlines still coming across. You're going to see that there's going to be a lot of preservation of capital type of trade right now, whether it's just cutting some profits, trimming back in some certain sectors that may have negative implications depending upon who's going to get elected. But either way, you're going to see some volatility for the next basically 3 to 5 trading sessions at the bare minimum. Volatility is here to stay, not only here in the United States, but it's here in the global markets, and you need to keep an eye on MarketStream.live to stay on top of it. All right, we're going to see you at the opening bell at 9:30 Eastern Time. Take care. Have a great rest of the trading day.